Something is happening right now that the mainstream financial media is completely ignoring. The ultra-wealthy, the people who manage hundreds of millions, sometimes billions of dollars, are quietly, methodically, almost silently moving their money. Not into stocks, not into crypto, not into anything your financial advisor has probably ever mentioned to you. And the reason they're moving it matters more than where they're moving it. Because where money flows at the top always trickles down to reshape everyone else's financial reality within a few years. And by the time most people figure it out, the opportunity is already gone. So today we are going to talk about what the 1% are actually doing with their money in 2026. Not what they're telling the press, not what their PR teams are saying, what they're actually doing. Stay until the end because the final move on this list is the one that genuinely nobody is talking about, and it will completely change how you think about protecting your own money going forward. But first, let's establish something important, because there's a trap, a very seductive, very dangerous trap that catches ordinary investors every single time a period of global uncertainty hits, and it's called the safe haven trap. Here's how it works. The world gets shaky, markets wobble, the news cycle turns dark, and suddenly everyone from your uncle to your work colleague to the talking heads on television starts saying the same thing. Go safe, buy gold, buy bonds, hold cash, park it somewhere stable and wait for the storm to pass. And millions of people do exactly that. They rush into what they've been told are safe havens, and then they watch and wait, and slowly, quietly, they realize something uncomfortable. While they were sitting in their safe haven, the wealthy weren't sitting still at all. The wealthy were moving, and they were moving into things that looked risky on the surface, but were actually the smartest repositioning of capital happening anywhere in the world. That is the safe haven trap. The idea that safety means stillness. It doesn't. Real safety, the kind the 1% practices, means moving your capital into the right places before everyone else figures out those places exist. So let's talk about exactly where that is happening right now in 2026. If this is the kind of content that makes you think differently about money, make sure you subscribe to this channel right now because we go deep on wealth psychology and financial strategy every single day in ways you won't find anywhere else. Let's start with the one that sounds the most boring, but is quietly becoming one of the most powerful wealth moves of this decade: private credit. You've probably never heard of it. Your parents definitely haven't. Your financial advisor might have mentioned it once and then moved on quickly because it's not something they can easily sell you. But the ultra-wealthy, they have been flooding into private credit for the last 3 years, and the pace is accelerating dramatically in 2026. Here's what private credit actually is in simple terms. When a company needs to borrow money, they have two options. They can go to a bank or they can go to private lenders. Private credit is when wealthy individuals and institutional investors act as the bank. They lend the money directly, and in return, they get interest rates that are significantly higher than anything you'll find in a savings account or a government bond. We're talking returns in the range of 10 to 15% annually in many cases, while your savings account gives you 4% if you're lucky. The reason the wealthy love this right now is simple. Banks have pulled back on lending, regulations tightened after years of instability, companies still need capital, and private lenders stepped in to fill that gap. The wealthy became the bank, and being the bank is one of the oldest, most reliable ways to build and protect wealth in human history. Now, can ordinary people access private credit? It's getting easier. There are platforms and funds emerging that allow accredited investors to participate. It requires research, it requires patience, but it is no longer exclusively the playground of billionaires. This is exactly the kind of shift worth paying attention to. But wait, before we go to number 6, I need you to understand something that makes everything on this list make sense. The wealthy are not reacting to the world, they are positioning for the world that is coming. Keep that thought in your head because it explains every single move we are about to cover. Now let's talk about something that on the surface sounds like it belongs in a history textbook, but is actually experiencing a quiet and dramatic renaissance among the world's wealthiest families. Physical, real assets. Not stocks in real asset companies, not ETFs, actual physical assets. Land, farmland specifically, timberland, water rights, infrastructure, the kind of things you can touch, stand on, and that will exist regardless of what a central bank decides to do with interest rates next quarter. In 2026, the movement of serious old money into these categories has become impossible to ignore if you know where to look. Bill Gates has been buying farmland across the United States for years and is now one of the largest private farmland owners in the country. This is not a coincidence. This is not a hobby. Farmland produces food. Food is not optional. The demand for it does not disappear during recessions. It does not crash because of a tweet. It does not evaporate because of a geopolitical headline. It just quietly produces returns year after year, while also appreciating in value because they're not making more land. And here is the part that stops most people cold when they first hear it. Water. The wealthy are buying water rights. As climate patterns shift and fresh water becomes increasingly scarce in certain regions, the people who own the rights to that water are sitting on something extraordinarily valuable. This sounds extreme, it sounds almost unbelievable, but ask yourself this: when was the last time human beings stopped needing water? The wealthy are not investing based on how things sound. They are investing based on where the pressure points of the next 20 years are going to be, and water is one of the clearest pressure points in existence. Timberland works the same way. Trees grow, lumber has demand, and unlike almost every other asset in the world, you can simply wait for your asset to literally grow in value while the market figures itself out. Slow, boring, beautiful, exactly what serious money looks like. Now pause for a second, because if private credit and farmland feel out of reach right now, that is completely fine. The point is not to copy these moves dollar for dollar. The point is to understand the logic behind them, because that logic you can apply at any income level. Keep watching. Stay with me, because number 3 is where it gets genuinely shocking, and this one is going to challenge something you probably believe about risk. The wealthy in 2026 are making a very specific and very calculated bet on geopolitical fragmentation. What does that mean in simple language? It means the world is splitting, not dramatically overnight, but structurally. Supply chains are being rebuilt regionally. Countries are pulling manufacturing back home. Trade relationships that existed for decades are being rewired, and the 1% sees this not as a crisis, but as one of the greatest capital allocation opportunities in a generation. They are investing in the infrastructure of this new fragmented world. Domestic manufacturing facilities, energy independence plays, rare earth mineral operations, semiconductor supply chain companies outside of traditional geopolitical flashpoints, port infrastructure in strategically neutral countries. This is not speculative, this is positioning. The wealthy understand that when the world reorganizes itself economically, the people who own the physical infrastructure of the new order capture enormous value. Think about it this way. When the internet was being built, the people who owned the cables, the servers, the physical backbone of that digital world made extraordinary returns. We are in a similar moment right now with the physical infrastructure of a deglobalizing world. The companies and assets being positioned to serve a more fragmented global economy are being quietly accumulated by serious money. While the news cycle focuses on the drama of geopolitics, the wealthy are focused on the opportunity embedded inside that drama. And here is what makes this so powerful. Every single person watching this right now lives inside this deglobalizing world. Every single person is affected by it. The only question is whether you're going to be affected as a passive bystander or as someone who understood what was happening and made a move. We are at the halfway point, and what you are about to hear next is the move that makes people most uncomfortable when they first encounter it, because it goes against almost everything we have ever been told about what safety looks like. Number 2. The wealthy are moving money into themselves, into their own businesses, their own skills, their own networks, their own intellectual property. Now, before you dismiss this as motivational fluff, hear this out, because this is a structural financial observation backed by where serious capital is actually flowing. In an environment of currency uncertainty, inflation pressure, and geopolitical instability, the asset that is hardest to devalue, hardest to tax, hardest to confiscate, and most directly under your control is your own human capital and the businesses built on top of it. The ultra-wealthy are doubling down on private businesses, not public stocks. Private companies where they have real control, real information, and real influence over outcomes. They are acquiring smaller businesses at scale. They are buying cash-flowing private operations in boring industries, laundromats, parking lots, storage facilities, funeral homes, auto repair shops, businesses that serve needs so fundamental that recessions barely touch them, businesses that generate cash every single month without the owner watching a stock ticker. This is the quiet empire strategy. It doesn't make headlines, it doesn't look impressive on social media, but it builds genuine, lasting wealth in a way that almost nothing else can match. Now, here is the part that most financial channels will never tell you. This strategy scales down perfectly. You do not need millions to buy a small, cash-flowing business. You do not need to be wealthy to invest so deeply in your own skills that your income becomes significantly harder to disrupt. The 1% does this at scale, but the principle works exactly the same at every single level. A person who owns a small vending machine route and reinvests the profits is playing the same game as the billionaire acquiring companies. The game is identical, only the zeros are different. Are you starting to see the pattern? Every single move on this list has one thing in common: control. The wealthy are obsessively moving toward assets in situations where they have more control and away from systems where they have none. Remember that, because it is the key to understanding number one. And now we are at number one, the move that almost nobody is talking about. The one that when you truly understand it will make the entire picture click into place like nothing else. The 1% in 2026 is obsessively focused on jurisdictional diversification. In simple terms, they are spreading themselves across multiple countries, multiple legal systems, multiple currencies, and multiple regulatory environments simultaneously. This is not tax evasion. This is not anything illegal. This is the oldest wealth preservation strategy in human history, and it is experiencing a massive revival right now for one very specific reason: uncertainty about what individual governments might do next. Think about it. In the last 5 years alone, we have seen governments freeze bank accounts of political opponents. We've seen capital controls appear in countries that were considered stable. We've seen currencies collapse overnight. We've seen dramatic tax policy shifts happen almost without warning. And the wealthy watched all of this and drew one very clear conclusion: no single country, no single currency, no single legal system should have complete control over everything you have built. So they are opening bank accounts in multiple jurisdictions. They are obtaining second and third citizenships or residencies. They are holding assets in different legal structures across different countries. They are making sure that no single government decision, no single economic crisis in any one nation can wipe out everything at once. And here is what will genuinely surprise you. This strategy is more accessible in 2026 than it has ever been in history. There are countries offering legal residency for relatively modest investments. There are stable banking jurisdictions actively welcoming foreign depositors. There are legal structures available to ordinary entrepreneurs and investors that a decade ago would have required expensive lawyers and several $million minimum. The barriers are lower, the tools are more accessible, and the need has never been greater. This is not a strategy for the paranoid. This is a strategy for anyone who has looked at the last 5 years and concluded that putting all of your eggs in one country's basket is a risk that no longer makes sense. So let's bring this all the way home. Let's talk about what this actually means for you sitting here right now. The safe haven trap is real. It catches people who confuse stillness with safety, who confuse familiarity with security, who wait for the storm to pass instead of positioning for what comes after the storm. The 1% is not waiting. They are moving into private credit and becoming the bank. They are moving into physical, real assets that produce value regardless of what markets do. They are positioning around the infrastructure of a reorganizing world. They are doubling down on private businesses and the irreplaceable value of their own capabilities, and they're spreading themselves across jurisdictions so that no single point of failure can take everything down at once. None of these moves require you to be a billionaire. They require something far rarer than money. They require the willingness to think differently, to look past the noise, to understand that the greatest financial risk of 2026 is not a market crash, it is not a recession, it is not inflation. The greatest risk is staying exactly where you are, in the assets everyone told you were safe, while the world quietly reorganizes around you and the real opportunities are captured by the people who were paying attention. You were paying attention today. That already puts you ahead of most people. The next step is simple. Pick one idea from this video, just one. Research private credit platforms available in your country. Look into how farmland investment funds work. Audit your own skills honestly and ask where you are truly irreplaceable and where you are dangerously exposed. Look into what it would take to open a bank account in a second jurisdiction. One move. That is how the quietly wealthy actually operate. Not with dramatic, sweeping changes, with consistent, intelligent, incremental moves made while everyone else is standing completely still, waiting for the safe haven to save them. The safe haven was never the destination. It was always the trap. And now you know, which means you are no longer in it. If this video shifted something in how you see money, share it with one person who needs to hear it. And if you want to go even deeper, the next video breaks down exactly how to start building real wealth from scratch, even if you're starting with almost nothing. Watch that next. We'll see you there.